Pickleball is hot, which is why I flew across the globe to sign his next superstar. Nice one, Christoph. He's got things for days, and I get points on points on points traveling with my Amex Business Platinum card. Exquisite form.
Earn 5 times points on flights and prepaid hotels. Book on AmexTravel.com with an Amex Business Platinum card. Terms apply. Learn more at AmericanExpress.com/business-platinum. Built for business by American Express.
All right. All right. Good, Stuart. Welcome. Good to see you, my brother. Awesome. All right, we're gonna get started. Ladies and gentlemen. And today, so first of all, welcome, guys. Thank you guys for tuning in. Today, we're gonna go over how to get sniper entries. And like before we even get into the charts, sniper entries, I think it's clear that that's the most desirable type of entry that all traders would like, right? That's the type of entry that obviously, it gives you the lowest type of stop loss, it gives you the least amount of risk, and it gives you the maximum amount of profit. But a lot of times, what I realize is traders struggle a lot with finding sniper entries, right? And it's not to say certain tools that we use, like the MACD, like RSIs and stuff like that, or even EMA and MA crossovers, is not to say that they don't work, right? They do work, but there are ways that you can chart your way to an actual key entry, all right, an actual sniper entry. So that's what we want to do today in our session, right? So, so our pair of choice, we can choose any pair. If you want me to mark up another pair, we can do that. But for right now, let's do UJ. We're gonna do UJ, and do let me know if there are any questions as we go through this lesson today. All right, guys. So getting started with breaking things down to go to a sniper entry, first and foremost is going to start with doing your top-down analysis. Okay. So really what you want to do is you want to do your top-down analysis, but you don't want to stop necessarily at the average place where most traders would stop their top-down analysis. Maybe they'd enter on the 1 hour, they entered on the 30-minute. You want to keep on breaking that down even further so that you can start seeing those little intricate details, and then you can take a better entry. But it all starts with the higher time frame, and you got to know how to do that top-down analysis. All right. So starting with the daily, I usually start with the daily, and I want to pick a point in time that has kind of developed already. All right. So all of this right here to the right is yet to be developed, but I want to see this, where this big move happened. What could have happened? What could we have done to pinpoint a sniper entry so that we could have entered and really capitalize on a big move? So let's see that real quick. So I'm going to use my replay button. I'm going to erase all of this and I'm going to mark it up as if this is what we have right now. Okay, guys. So I'm going to do this. I'm going to mark this up, and I'm going to look for all of the areas of support and resistance that I personally see. Okay, all the areas of support and resistance. So we clearly see clear areas of resistance up here. Let me just move this panel away. Clear area of resistance right up here. Clear area of support right down here. Okay, technically you can extend this area of support to even all the way down here, right? But that's pretty much what we're seeing on the daily time frame. Okay, so now let's go down to the 4 hour. We're going to go down to the 4 hour and check out what else is happening. Okay, so on the 4 hour, again, I want to be aware of what the market is doing, right? Where are we coming from, what the market is doing, and what other areas of support resistance am I seeing, right? So in terms of just looking at it from a zoomed out perspective, we see that there was once an area of resistance right over here. We can mark that off, right? Could be significant in the future. But other than that, all I know is that we're on an uptrend. We were on a steady uptrend up until we got to this point where price ranged a bit. All right. And then there was a big drop as it got up to this high over here. So this specific high over here, right? If you are currently in a live environment and you get to this point, and I know that you see that this double top is coming, right? And you can assume that price is going to drop, but price is not always necessarily going to drop when it gets to this area. But how can you minimize your risk if you were to take that trade and go for a reversal, right? How do you minimize your risk? You got to break this down. Taking it from a 4 hour, right, or even taking it from a 1 hour does not help you because your stop loss is going to be significantly high. So that being said, you want to take it on a lower time frame. So as you're looking at this, you have to like break down what the market is showing you. So here, the market is showing me as I get to this area right over here, I see that there was a big drop, right? Big impulsive move to the downside, and then there was a big correction. So fine. Usually I would enter this trade right over here, right at the end of this correction. But is there a even more detailed, fine detailed way to have entered this trade, maybe on a lower time frame, maybe catch it even earlier or safer, etc. So you got to drill this down. So we'll drill this down all the way to the 5 minute, and we're going to take a look at what's going on here on the 5 minute time frame, right? Let's just find that area. Let's see if we can find that area. I don't think we can find that area on the 5 minute time frame, so that's okay. Let's find this area on the 15 minute time frame. And as we get to the 15 minute time frame, this is what we want to do. So on the 15 minute time frame, what I'm looking at is, again, you have clear market structure that is showing you that I have a move to the downside, right? Impulsive move to the downside. I have a correction of that move. So obviously I can enter Usually I can enter one out of two places. It depends on the type of trader you are. Depending on the trader, a lot of traders like to enter at the top of the correction. So because we're talking about sniper entries, that's always going to be the place of reference, especially for a downtrend, right? If I'm going to enter a trade at the best entry for a downtrend, it has to be at the top of the flat. All right. Does that make sense? So there's some traders, especially me, right? I'm more so like a momentum trader nowadays. So I'll probably catch this big move to the downside as it's breaking. I'll wait for a close or something like that, and I'll catch it much later. But if you're talking about a sniper entry, you do want to go along with structure and catch it as high as possible so that you maximize on not only the profit, but you also maximize on the minimum stop loss as well. Okay, so I need to pay more attention to what other structures are being shown on lower time frames like the 15-minute and the 5-minute, right? So over here, from this moment, as price is going, doing all of this and giving you all of this consolidation, I should be able to spot at least what price is doing at this point, right? I see that price is consistently trading within this zone over here, and it's not breaking past this area of resistance over here. That's really telling, right? That is telling me a lot. So after a while, you would think that after a while, it touches here, right? First of all, it touches here, and then it touches here, and then it touches here, and then it touches here and here and here, and so on and so forth. After a few touches, I'm going to assume that this area of resistance is valid. So there are a couple reasons why I want to assume it's valid. A couple reasons why this area is valid. It's not just the lower time frame, guys. This is why we said we want to start on the with top-down analysis. It's not just the lower time frame. Okay, Mr. Ndukwe, what's going on, my brother? Good to see you. So it's not just the 15-minute that gives you validation that this area of resistance is valid, right? Because 15-minute area of resistance could break. It could break. It started with the top-down analysis. Going on from the daily to 4-hour, this that I saw over here, right? You see this double top that I saw over here. Price came to this area, right? Once price came to this area, huge drop to the downside. Huge drop to the downside. Once price came to this area, okay? So I already have previous data that particular area right over there is a supply zone, right? That particular area is an area where I am going to most likely encounter some kind of resistance. So that right there, the higher level time frame confluence is exactly what you need to pair up with what you saw on the 30-minute and 15-minute. Because when we broke this down to the 15-minute, right, going back to it. When we broke this down on the 15-minute, we saw even more information, right? We saw more of a pattern. You're not going to see all of this on the 4-hour, right? On the daily. You see this as you drill down to the 15-minute. If I was just taking this trade on the 4-hour, right, I might take this trade as I see this candle falling on the 4-hour because I have no other reason really to take this trade on the 4 hours. Not a lot of information here. All right, so as this candle is falling, that's when I'm taking this trade. But number one, I'm getting in so much later, right? And number two, my stop loss has to be so much bigger, okay, just to cover the top of that zone. So if I want to capture a sniper entry, if I actually want to capture the best entry possible, I can't just rely on these higher time frames, the 4-hour, the 1 hour, even the 30-minute. I want to drill down to the 15-minute and even the 5-minute, find the small patterns within those time frames, and then mark those up. So now at any point within this consolidation, as I keep hitting this area of resistance, it's clear for me to enter. Okay, so it hits here the first time, it hits here the second time. More than likely, I would say that most people would probably take their entry right over here after this third hit, maybe even at the second hit. But most people would take their entry at this third hit, and they keep their stop loss a little above the previous high. Where's the previous high? Previous high is right over here. I just want to keep my stop loss above the previous high, and then I want to take my entry right here, right at this area where it keeps on hitting and it cannot break. You do that, that's the best entry that you take for this particular trade. Okay, so in terms of your risk to reward, the amount of pips that you're risking is 23 pips, 22.9, right? 23 pips. The amount of pips that you seek to gain is 102. So just about a 1-to-4, right? Maybe even more. Just about a 1-to-4 risk to reward ratio right there. Very, very safe trade. But again, it starts with we're going to look for other areas on the chart. All right, I'm not going to go too far back, because what I realize is if I go too far back, then I won't get the benefit of the 5-minute. So I want to go to something that happened more recently. All right, guys. So let's go to something that happened more recently. Let's do a buy, right? And let's look at, I want to look at a particular area, right? Let's see this area, a clear area of support. Whatever area we choose, I want it to be a clear area to you where you could see it as an area of interest, and you would start breaking things down to look for a sniper entry. Okay, so that's why I'm looking for that area. Okay, so I'm going to look at this area right here. So this area right here, reason why I'm choosing this area is because price is coming from a downtrend, a major downtrend. Price is coming from a major downtrend. And then finally, price breaks that downtrend and then starts to trend upwards. And now as it's trying to trend upwards, we want to see what areas in which we could have taken this trade, right? So that we could have capitalized the maximum amount of profits on this trade. A couple of things we need to know. This is what a lot of people do when they backtest. They just assume that they would have known all of this was going to happen to the right, and none of that is true. You got to put yourself in the best environment possible that closely mimics the actual live trading environment. Even when you do that, when backtesting, it still won't necessarily mimic it 100%. But you got to be fair, okay? You're not going to see this for sure on the in the live environment, right? So I'm going to use the bar replay about this area over here, right? I'm going to use the bar replay at this area right over here, okay? And then we're going to see how we can predict what is supposed to happen next, okay? Couple of things I had mentioned, right? I had mentioned in previous videos how the market moves. Can anybody in the chat tell me the 3 to 4 ways that I've mentioned on how the market moves? There were 4 specific ways in previous videos that I mentioned how the market moves, right? That is important in order for us to drill this down so that we can actually find the sniper entry. How does the market move, guys? How does the market move? How does the market move? I'm waiting for these responses here. How does the market move? So, okay, so move number 1. Okay, I see uptrend, downtrend, range consolidation. Just about. Not necessarily uptrend, downtrend, but I understand what you're saying. So, how the market moves? We have an impulsive move, right? There we go. Boris the Butcher. Impulsive moves, corrections, continuations, and then Ndukwe also said it, consolidation. 4 ways the market moves. I need to know that. I got to commit that to memory in order for me to catch this. So as I'm looking at this, right, I'm seeing that impulsive move to the downside. Let me just zoom in so you guys can see. I'm seeing that impulsive move to the downside, right? I'm seeing that correction, right? And I'm seeing that continuation. And then that correction and continuation. And correction, continuation. All right? You see the pattern, right? Correction, continuation, correction, continuation. So, a couple of things. The corrections are valid. Like downtrend and uptrend are different, but the corrections are valid so long as, for a downtrend, so long as you see this low right over here. Okay. Sorry, not the low. My mistake, guys. So the high for a downtrend, right? You see this high that was formed right over here. Let me just remove that so I don't confuse you guys. You see this high that was formed right over here. This is what you call your previous high to this correction. So as price is correcting over here, this particular area, I don't want the high of this correction to pass the high of the previous correction. That's always the rule for the downtrend only, downtrends only. The high of the current correction cannot pass the high of the previous correction. All right. Again, high of the current correction cannot pass the high of the previous correction. So because this high is lower than this high, it's a valid correction. And I'm going to use that rule as I move on to other corrections. Same thing, right? So as I move on, so we said that this was a continuation downwards, and this is my next correction. So the next correction, I'm comparing this correction to the previous one. Previous one is over here. Now I'm asking myself, does the high of this correction pass the high of the previous correction? It does not. Because it does not, it's a valid correction. Okay. This is why this is important. Very important here. This is why it is important. Because at some point, the high of the next correction is going to pass the high of the previous correction. And that's how I start classifying what a reversal actually is. Okay. Because a reversal breaks the trend. So you see this trend line, right? There's a reason why you see a trend line. It's trending. And the reason why it's trending is because it's following this specific rule that each high is lower than the previous high. In other words, you're forming lower highs, lower highs, lower highs. So long as a downtrend is forming lower highs, then we know that all of the retests, everything, the downtrend is intact. But until, and I'm going to play the bar replay real quick a little bit, until it starts to break the previous high, and we're going to see that very soon. Makes another lower high, lower high. All right. Fast forward. All right. Just want to make sure this is it. Okay. Now I'm going to let's look at this area, and now let's compare to see what happened. Now, what happened here? Okay. So we were good. We were doing exactly as expected, right? Seeing the continuations, the corrections, continuations, the corrections, continuations. Right over here, what happened as we got to this area? Let's compare. It broke the rule here, right? So here we see that this high, this went as high as this area over here, right? And the high of this correction, right? The high of this correction went as far as this area right over here. I'm sorry. So we have the correction, continuation, and if we were looking at the live environment, this is what we would have classified as the correction, and the high of that came right over here. Right over here. Slightly higher, looks like it's about the same height, but this went slightly higher. But to confirm this, we saw that price moved even higher on the next, right? On the next move to the upside, price moved even higher. This is letting me know that not only is this breaking the rule that the previous high is not lower than that the current high is not lower than the previous high, but that the trend is starting to break, right? The trend is broken. That being said, because the trend is broken, if I can know these rules and I can identify all of this and I recognize that the trend is broken over here, so the minute I identify that the trend is broken, the next thing I'm looking for is a confirmation that we're going to the upside. Now, this is the key question. I want you guys to pay attention. What is the confirmation that I need to let me know that I'm going further upside? I'm going to give you a clue. Again, we said for the downtrend, I'm looking to see that that we are forming lower highs, that the current high, right, is not higher than the previous high. We are forming lower highs. That's what I want to see on the downtrend. So that being said, what do I have to see on the uptrend for an uptrend to start being validated? What do I have to see on an uptrend? That's the question for you guys. What do I have to see on an uptrend for an uptrend to be valid? You guys let me know. I'll give you a minute. What do I have to see on an uptrend for an uptrend to be valid? Will be safe to use the 1 hour time frame or something small. Yeah, you could use for right now, you could use the 1 hour time frame, right? Because you're waiting. Really, what this is for that break of structure. You're waiting for that break of structure. So that's fine. You're looking for higher highs. So now, if this is truly going to be a reversal, so I already know it kind of broke the rules over here, right? So if it really is a reversal, I can't just jump in. Like, just because this gave me a higher high, right? I can't just jump in for the buy over here. And especially this is confirmed because look what happens right after, right? Price goes to the downside, and that's 65 pips. More than likely, you would have lost that trade, right? I need to confirm that it's going to make a higher high. I need to confirm that first. So that being said, this is what I need to see. I need to compare, right? Now, because on the downtrend, I'm comparing the highs to make sure the highs are lower. On an uptrend, I'm comparing the lows, right? To make sure the lows are getting higher. The lows are getting higher. On a downtrend, we have to form lower highs. On an uptrend, we have to form higher lows. Okay, higher lows, okay. Uptrend, lower highs, lower lows, right? Downtrend, higher highs, higher lows. So I'm going to compare the lows of this potential uptrend. So where was the previous low? The previous low was over here, right? The new low, the previous low was over here, right? And the new low that was formed during the correction of the uptrend, right? Let me erase this line. During the correction of the uptrend, because it goes impulse, right? Flag, or in other words, correction, flag, and then it goes continuation. All right. So the low, the current low is up here, and it's higher than the previous low, which is down here. Because that is so, I can say that this is starting to form a valid uptrend. Okay, this is starting to form a valid uptrend. Now you have a decision to make. You can either take this trade over here, or you could wait for further confirmation for the next move to happen, right? The next move does the same thing, gives us a correction, right after the continuation, a correction over here, and then continues to the upside. Now, as I'm judging this correction over here, very important that I take a look at this. This correction, this does not break the previous low to my understanding. Why? Because I'm not necessarily considering those wicks. All right. I'm not considering wicks when I'm talking about a low. I need the body of the candle. Right? So I'm not necessarily considering the wicks over here. Okay. I hope that's clear. So because I'm looking at the body of the candle, all I see is I didn't see a lower low. I saw an equal low. And if we see an equal low, the uptrend is still valid. That is an equal low. Okay. Uptrend is still valid. So there's my question. How do we catch this as early as possible? This particular move right over here. How do we catch this move as early as possible? We cannot stay on this high time frame, this 1 hour. In order for us to catch this as early as possible, I would have identified a couple of things. I would have identified this downtrend was broken, right? That's number one. I identified the downtrend was broken. I waited for a retest, right, of that downtrend, okay? And as it looks like the retest is ending, I need to prepare myself to take the best entry possible. This is where we drill down to take a sniper entry. Either one of these could have been an entry, either one of these. Let's start with this one, and then we'll look at this one, okay? So let's go down to the low time frames, 15-minute, right? And then we'll go down to the 5-minute to see if we see anything further, all right? So on the 15-minute, over here, let's see, is there anything that we could have seen that would have proven to us that we could have taken this move a little earlier? This is what I see. A couple of things, right? I see a small area of resistance, right? Very small area of resistance, 15-minute resistance, right? Okay. This is validated because it was once an area of support. You see that? It was once an area of support right over here. came back, price broke it, retested it, came down, and then it was the area of resistance. So now what I can do is on a 15-minute level, I can literally say, I'm waiting for the break of this area of resistance. That's what I could say. I'm waiting for the break of this area of resistance. So notice on a higher level time frame, I'm within a flag on a high level. But if I go deeper down into a lower level, I'm at a double top. I'm at a resistance, right? I'm at a resistance, and I'm trying to see if it's going to respect resistance and fall, or if it's going to break it and continue to the upside. And I know if it breaks it, then I can take a quick buy with a low stop loss. But I can't stop there. I got to go down to the 5-minute, right? Because this is cool. Like, that could be my rule. But technically, this is the candle that breaks it, and it doesn't close to up here. It doesn't close to up here. So I don't know necessarily if the 5-minute closed earlier, but let's check. But if it did close earlier, then we could have taken this earlier. Okay? It wasn't this. It was this one. Okay? So on the 5-minute, perfect. On the 5-minute, it breaks resistance right over here. I hope you guys see that. On the 5-minute, it breaks resistance right over here. Right over here. So your entry actually ends up being right over here. And your stop loss, you could literally put your stop loss right below that area of resistance, right below that area of resistance, right over here. And your TP, you want to look for, I'm going to get to the stop loss in TP, but for right now, let's just focus on the entry, right? Just the entry, okay? The 5-minute, because we went all the way down to the 5-minute, I'm able to take my entry here instead of if I went to the 15-minute and I waited for the breaker structure. If I went to the 15-minute and waited for the breaker structure, I would have had to take my entry, look, all the way up here, because that's where I see the breaker structure on the 15-minute. All right? Or if I was trading off the 30-minute, if I was trading this off the 30-minute, let's see. 30-minute, I would have to take my entry up here, right? Because that's the next candle. If I was trading this, if I was just entering based on what I saw on the 1 hour, and we'll stop there, but if I was just trading based on what we saw on the 1 hour, then where am I taking my entry? 1 second. I don't even see where my thing went. All right. But if it was the 1 hour, I'm taking my entry. Okay, that's what it is. It's too small. If it's on the 1 hour, I'm taking my entry all the way up here. All the way up here. So look how much ground you cover. So you literally cover about 35 pips of a difference by actually going all the way down to the 5-minute to take your entry rather than the 1 hour, the 30-minute, etc., right? Instead of taking your entry up here, which is what the break would have looked like on the 1 hour, I took my entry down here on the 5-minute, and that's a difference of, let me see, from the entry all the way down. No, that's more. Never mind. That's a difference of 60 pips. 60 pips. To be honest, you're probably done with this trade by the time somebody who's trading on the 1 hour is starting with the trade. You're done with this trade. You understand? So that's that sniper entry. Not only are you done with this trade, you took a lower risk on that trade as well. Let me take some questions real quick. So what's the smallest time frame and best for a scalper? That's a good question. That's a great question. Personally, for me, right, I'm not comfortable going beyond the 5-minute. And it doesn't mean the 1 minute is wrong by any means, right? Because there are people who are successful with the 1 minute. But for me, it's the right amount of information that is somewhat valuable, right? The 5-minute. The 1 minute gets a little iffy for me because there's a whole lot that happens in 1 minute. 1 minute at a time, there's a whole lot of patterns that you'll see 1 minute at a time. So for me, 5-minute is probably where I draw the limit. But I do see some scalpers use the 1 minute though. It just depends. Depends if it works for you though. But 5-minute for me. But questions, guys. What other questions do you guys? Is this clear though? Do you guys understand the difference between if you took this trade on the 1 hour, on the 30-minute versus if you're taking this trade on the 5-minute, right? Look how much earlier you get in, how much of a difference in pips you make up, and how much smaller your stop loss ends up being. Because again, if I'm taking this on the 1 hour, hold on. I want to show you guys real quick. Hold on, let me just extend this so it's big enough so I can see on the 1 hour. If I'm taking this again on the 1 hour, right? If I'm taking this on the 1 hour, then my stop loss, to be very honest with you, I'm waiting for the breaker structure. The breaker structure happens on this candle. My stop loss, technically, by structural standards, my stop loss should be all the way down here. All the way down here. By structure, right? It should be below the previous low. So, like, that's just not reasonable at all. This is like, yeah, beyond 100 pips. It doesn't make sense to even take the trade. All right. So you want to definitely drill down and go to lower time frames. So next question, what if my bias is based on the higher time frame, but lower time frame trend conflicts my bias? Let me see. Bias is based on the higher time frame. Okay. But lower time frame trend conflicts my bias. Like what if the 4 hour and 1 hour are buys, but the 15-minute is a sell? Well, that's a great question. And that's something you have to keep in mind too, guys. So if on the higher time frame, I am buying, right? And on a lower time frame, I'm getting like sell signals, sell entries, potential sells. I need to keep that in mind. It's not that you shouldn't trade them, right? You can trade them, but you have to keep it in mind. You can't be risky with them, right? Let me try to find an example of that because that's a great question right there. Let me try to find an example real quick. So let's say, this might be a force, but let me try to find this example here. Okay. It's going to be a small buy, right? So let's say it's clear that I'm on a downtrend. I'm going to use this particular area right over here. Let me note it so that I know where I'm at. This area right over here. Okay. So that area right over there. So guys, I'm on a downtrend or an uptrend in this particular area. I'm on a downtrend, right? A clear downtrend over here. Clear downtrend. So I know on a higher level time frame, 4 hours is telling me downtrend, 1 hour is telling me the downtrend. All of the higher level time frames is telling me a downtrend. The thing is, where this is a correction on the 1 hour, on the 5-minute, if you're so focused on the 5-minute, this is going to start looking like a buy. Okay, I hope we can go down there. I hope it gives me that. All right, good. All right, the 5-minute, this actually looks like a buy. Now, it's not that you can't take a buy, right? But you got to be aware of where you're at, okay? This is where, like, you have to be an experienced trader to do this, right? So it's not that I recommend it, especially if you're a new trader, but this is what we call counter trend trading. So when you're counter trend trading, you're keeping in mind that on a higher level time frame, okay, I'm on a retest right now. Price already made its down move. It's starting to come up. I'm on a retest right now. I want to capitalize on the retest. So that being said, a retest of a downtrend is a buy, right? It's an uptrend. So that being said, I want to now use whatever I can, whatever indicators I can to capitalize on this buy. From the 5-minute, I can easily look at this and say, okay, I see an area of consolidation right over here that's forming an area of resistance. So let me wait for the break of that. Let me wait for the break of that area of consolidation. Price clearly breaks right on that line, right? Exactly where I drew that line. Price breaks right over here. I have a small buy. And when you're buying, right? When you're counter trend trading, you're not going for big moves. You're not risky like that. You have to go for short scalps, right? Because you have to understand I'm still on a downtrend. The overall move at some point is going to take over. Right? So that being said, I take my buy over here, quick scalp. Let's see what I get. I get a quick 15 pips. For a lot of people, that's enough, right? 10 to 15 pips, that's enough. And what I can do is keep on playing this until it doesn't work out, right? So as price comes back to this area, price comes back to this area and retest this area right over here, I could take a buy. It may not necessarily work out and give me 10 pips, but I can hold it until it does, if it does, right? So over here, if you had the perfect entry, yeah, you would get 10 pips. Okay. Over here, maybe not so much. So price comes a little lower, and then at this point, you need to stop taking those buys, because you understand that the higher time frame at some point, especially at this point, is taking over, and the continuation is going to the downside. Okay. So there is ways to counter trend trade by going down to the lower time frame. That's the only way you're going to do it too. You got to go all the way down to the lower time frame to be able to take those small buy moves on a downtrend or those small sell moves on an uptrend. Same thing. Okay. What questions do we have? What other questions do we have? If not, we'll go through one more example. But you guys let me know, what pair do you guys want me to find this in? You guys let me know a pair that you guys want me to find this in. Okay. We'll do some sniper entries on another pair. Maybe one more sniper entry. Let me know, guys. Which pair or what question do you have? Let me know. During a correction, so one more question. Okay. During a correction, how do I know? Okay. During a correction, how do I know? Good question. How do you know that you're in a correction or that a correction is coming? When exactly to enter? Because some corrections take a long time. Okay. So how do you know where to enter, when to enter when you are in a correction? Because some corrections take a long time. Okay. So what pair? We were doing EU, right? Okay, perfect. No, we weren't doing EU. What pair were we just doing, guys? UJ. My bad. I'm tripping. All right. So again, the question is, when exactly do I know when to enter, right? Because some corrections take a long time. So how do I know exactly when to enter? Okay. My word of advice, a couple of things. A couple of things can be used before we get into like indicators and stuff, just based on technicals, support and resistance. Where is support being formed as far as a buy move? Where is resistance being formed as far as a sell move? So within a correction, so for example, if it's a downtrend within a correction, I'm looking to see if an area of support is being formed where price is not going any higher within that actual correction, right? Is support being seen as I'm in that correction, right? So same thing for, I think we had a different area. Same thing for the downtrend, right? Over here, 1 second. Where is it? Might have erased it by accident, but it's okay. All right. But same thing. If I'm looking for an area of resist, if I'm looking for a downtrend, if I'm looking for a down move, I'm looking to see within the correction, is support being formed at some point? If price is continuing to respect a particular area of resistance, my mistake. If prices continue to respect this particular area of resistance, then we know that this is probably going to be a safe area to enter. Now, it doesn't mean that is the actual place that price is going to drop. So, in other words, what I'm saying, just because I entered here, because I identified that this is an area of resistance, doesn't mean price is about to drop right now. And you clearly see that, right? This area compared to where price actually dropped, this took 12 hours before price actually dropped. That's the other thing. This is the caveat when you are looking for sniper entries. When you're looking for sniper entries, a lot of times you're going to have to wait out on the trade. This could be a swing trade. This could be a multi-day trade, because you have to wait for price, the overall time frame, right? The higher time frame to actually play out. Just because you entered on the low time frame, you did your job by finding the best entry. So you did your job. You found the best entry. But it's not to say price can't continue and play around in this area of resistance. Okay. So you may not necessarily know the exact timing, right? Exactly when price is going to take off, but you may know the area in which price is going to like stop trading higher, especially on a downtrend, and stop trading lower on an uptrend correction. All right. So that those things you may know. Now, when we add indicators now, like MACD and stuff like that, and I'll add that real quick. When we add indicators, that's a different type of confluence that you may have here. If I add the MACD4C real quick and we take a look at that, there may be a way to spot this in a more timelier manner. Okay, in a more timelier manner. So I'm going to go down to the 5 minute just like I did before and take a look at that area. Or the 15 minute, because I don't think that particular area went to the 5 minute. So let me go to the 15 minute, that area. And on the 15 minute, we're looking at our MACD, right? And guys, like we did a MACD lesson before. So if you need any, any more education on MACD, definitely go to those lessons. And I'll probably do it in the future if there's any demand for that to come back. But this is what I'm looking for, guys. So take a look at what's going on over here, right? Take a look at what's going on over here. Over here, I have equal highs. I have equal highs for a while on price. Take a look at price. Because how do I know I have equal highs? Well, because we are at this area of resistance, right? So pretty much all the highs are just about equal. But on the MACD, is that also the same based on what price is showing me? So based on where price is right over here and based on the MACD over here, what is the MACD showing me in comparison to price? So starting from this area, what is going on with the MACD? I'm going to extend this up so that you guys can see. Give me 1 second. Let me extend this up so you guys can actually see this more clearly. All right. I'm trying to find that thing. Source code, no. All right, there we go. All right, take a look at the MACD. This is the same area. This is the same area that you see on price, right? We see that price has equal highs. Again, let me put this down. Put this down. Price has equal highs over here. It's making equal highs. It's not going any higher than these highs. Not going any higher. But what's going on with the MACD right now? With the MACD, 1 second. Let me pull this up. In that same area, the highs on the histogram are getting lower. On the histogram, I'm seeing lower, right? I'm seeing even lower to the point where it breaks the zero line. So being that I'm seeing that, this is what we call divergence. And again, we went through this before, but we can always go through it again, right? This is what we call divergence. That's a key indicator that a reversal is coming. Key indicator that a reversal is coming. So if you use the MACD, if you add the MACD to this, that can further pinpoint that area where, okay, a reversal is probably coming. So I can definitely chill out, right? If I already entered, I could definitely chill out because I know this is probably going to drop very soon. Or if I didn't enter, I should probably enter soon. I'm seeing signs of divergence, right? All throughout this whole area, you started seeing signs of divergence. The market told you. This whole area started seeing signs of divergence. And then finally, you get to this area and price finally fell. So you saw that right ahead of time, right? That divergence didn't come way early. It came right on time so that you had time to enter this trade and then the trade played out as expected, okay? Yep. Yeah, that's another good point. Good Stewart said you got to trade during the session. That matters too, right? This big move, I'm just curious. This big move, you see, I'm not surprised. This happened during New York session, 8:30, right? And this is probably a news move more than likely too, so I wouldn't be surprised. But like you got to trade this session. So if you're trading UJ, you got to trade that US session or at least that Asian session, for a little bit more. But you can't be trading so out of session depending on the pair that you're trading, because you'll probably stay within this correction for a long time. So if you're in the right session, so that more than likely that big move is probably coming because you're in that volume heavy session, right? That's usually US session for most of y'all. Okay, last one. I didn't hear a pair, so I choose a pair. We're gonna do gold. My bad. We said gold. So let's choose gold. Let's start with, again, top-down analysis. Same thing. Starting with top-down analysis. Let me choose an area first. and it can't be too far because I need to be able to see data on the 5 minute. Let me just erase all of this and all of my alerts. All right, but if I miss a trade, I'm gonna blame y'all. Y'all making me delete my alerts. All right. All right. So let's see. On this uptrend over here. We're on the uptrend. Okay. So we're on. I want something. All right. This is perfect. All right. So I'm going to mark this up. Right. So clearly on the daily, right over here in this area, price form an area of support. Okay. Let's continue to drill down. Going down to the 4 hour. All right. Going down to the 4 hour. Okay. We're going to start with this area first. This is the area of interest first. Okay. And I'm going to tell you why. So I'm going to use my bar replay. I don't want to see anything that happened previously, even though I already saw it, right? I'm already cheating. But let's just imagine we don't see anything that happened previously, right? Okay, we're over here. Reason why I chose this area is because price already gave us evidence, already gave us proof that this was already a demand area, or it was a demand area, right? We call this a demand area, right? Because we can't say this is an area of support yet, right? This is not an area of support yet. You need at least a second hit for it to be support. So we know it's a demand area because buyers consider this area as a discount, quote unquote, for price. So you see that big influx of buys as it gets to this area. So boom. So you have a demand area. This demand area becomes an area of support, a potential area of support, and an actual area of support when price settles over here on that second hit. Price settles over here, right? And now we know that we have an area of support. So now I want to see if I can take advantage of price respecting this area of support, right? So let's go down further. We got to keep going down. And let's see what's going on in this area. Okay. What other areas of support and resistance do we see? Everything is good so far. Nothing else to mark up, nothing else to add on this time frame. All right. 30-minute, same thing. All right. I'm going to drill this down, even down to the 15-minute. And now I want to take a look at what's going on here on the 15-minute. Already on the 15-minute, this is what I see. We're coming from a clear downtrend, right? This was clearly a downtrend before, right? On the higher time frame, price came all the way down. And then as it came to this area of support, this is what happened here. Price bounced off this area of support, came back and formed this low, and now it's continuing to the upside. But before we get to what's going on the upside, take a look and see how we compare the low that price currently formed compared to the previous low that it was at. This was the previous low, right? Price formed a higher low, right? A higher low. In other words, the requirement for an uptrend. Price gave me a higher low again, okay? So we said for the downtrend, we're looking for the lower highs, right? But for the uptrend, we're looking for the higher lows, okay? So price formed a higher low, and based on the 15-minute alone, this is an area, this is a confirmation for me to be able to take my entry over here. Why? Because this, one second, because this low over here did not go lower, in other words, than this low over here, okay? Hope you guys see that, right? So because we formed a higher low, then this is now valid for me to take an entry on the 15-minute. If we go even further down on the 5-minute, and I don't know if we're going to get that data. Let me see. Because it's going pretty far back. So we probably don't get that data. But even on the 15-minute, clearly we can see that we get a pretty decent entry as we go to that lower time frame right over there on the 15-minute. Okay. So let me look for that area because I kind of lost that area real quick. Guys. Might have to go to the higher time frame. 1 second, 1 second. I'll find it. All right, there we go. All right, guys. So that area, I want to show you the difference. The difference is looking at this on the 1 hour, you're probably more than likely what a lot of people will look at is I want to see this break out, right? I need to see this break out of this structure so that I can consider this a valid buy. And what a lot of people will do is they'll see this as an area of support, resistance, right? They'll see this as an area of resistance, right? Price showed me that it has respected this area. It can't break past this area. So in order for me to consider taking that buy, I need to see price break past that area. And for it to confirm, like, here's the thing, guys. This is the reason why the rules are the rules, right? I can't just because like this candle breaks out, I can't just enter on this candle because this candle is not guaranteed that it's going to close here. Yeah, it ended up closing here, yes. But like we've seen plenty of times, right? Over here, candles go as far as here. And look at where this candle actually closed, right? It closed actually all the way down here. So if you're going based on impulse entries, you got to at least wait for a candle close to actually confirm that you're going that direction, right? To actually confirm that you broke an area of resistance. So I can't, like, it just don't, like, it could work out sometimes, but I can't keep going in on an open candle that's still forming and hasn't really closed yet. So that's why we're waiting for these candle closes. The point of what I'm saying is, if I'm on the 1 hour, right, then I'm technically waiting to enter this trade here on this candle, on the second candle. So if this is my buy, my long position, it's here. Okay, nothing wrong with that, right? Nothing wrong with that. The point is, we could get a better entry, and we might even be done with our trade before we even get this far. Okay, so let's go to the lower time frame where we were at before on the 15-minute. Let's see the difference between the entries. Okay, the difference between the entries. All right, this might take a little while, just 30 seconds, and I should find it. It's a whole lot of data. Matter of fact, this is what's easier. Let me do this. Let me pinpoint the date. Okay, this is Friday, 21st of October? Okay, October 21st, and we're going to go down in 15-minute. We're going to use our date. Okay, October 21st. I'm assuming 2023. October 21st, and then go to that area. Okay, that area is over here. So it should be somewhere around here, right? October 21st, 23rd. I don't know what's going on with this function over here, guys. All right. It's not working for me. It's not working for me. But it's all right. So let's go back to that area. All right. Let's go back to that area. All right. Going back to that area. We already mentioned, I have it noted here. I just wanted you guys to see on the 15-minute. But if you remember, when we were down on the 15-minute, we said that this was the lower high and this was the most previous high, right? So the entry was at this ellipse right here, if you guys remember, right? So the entry is at this ellipse right here. I just wanted you to actually see it on the 15-minute, but it's not cooperating with me, all right? But anyway, this is the actual entry that we take on the 15-minute versus the entry we take on the 1 hour. Now, the difference between the entries, okay, again, let's compare the difference between the entries. So we enter here between that barrier between that green and red. So we enter here usually, right? So I'm comparing this area here, this entry, between this area here, that entry. So this is a difference of from here to here, That's a difference of 100 pips. 100 pips. I'm done with this trade before the person who's traded off the 1 hour starts this trade. I'm definitely done with this trade. You understand? So that is the difference. That is the huge difference that you have when you are going for sniper entries. You get to catch the move once, but you guess what? You can catch it again. You can catch it twice because on a higher time frame, it hasn't even taken off yet. Technically, you catch so much more of a move if you understand how to put all of these pieces together. Number one is multiple time frame analysis, right? Top-down analysis. Number two is understanding of market structure. Am I on a downtrend, an uptrend? Where are my areas of support and resistance, right? Number three, just breaking it down to a lower time frame. Same things that I'm seeing on the higher time frames that I'm marking them off is the same thing I need to train my eyes to see on a lower time frame. Fine. Now I'm on a lower time frame. Where are those areas of resistance? Where are those areas of support? Where are those breaks of structure? Because those are going to be those confirmations that maybe this move is ready. I can catch it early, right? And then on the higher time frame, I can maybe catch it again. Okay. So like that's the benefit. You guys see that. That's a huge difference. I'm getting in this trade 100 pips earlier than if I was just eyeballing it on the 1 hour. And maybe on the 30-minute, maybe it's like 70 pips earlier, right? And usually that used to be like where I'm taking my entry on the 30-minute. But like really when you like hone in on sniper entries and you get better at that, you see the difference. World of a difference. My only advice, this is a caveat because you have to know with sniper entries, you can be wrong a lot more than if you waited for like a 30-minute confirmation. All right. So if you wait for a 30-minute confirmation, you tend to be right a little more, right? Because technically, like that's a decent time frame where price confirms itself. On a lower time frame, you'll get a lot more fake outs. You got to understand that. So there's a give and take. You're not just going to go on a lot lower time frame and then just be completely profitable. But keeping that in mind, you don't over risk, right? Because why do I not need to over risk? Because I already solved the risk to reward ratio, the risk to reward issue, right? I already solved for that. I solved for that by going down to a sniper entry. My stop loss is so much lower anyway. And because it's so much lower, there's no need for me to risk so much. If anything, extend my TP. I can make the same money. If you're going for $1,000, extend that TP instead of putting that risk on how many lots you're trading higher. You understand, guys? So let's do that. Let's try using more of these sniper entries and let's train our eyes so that we can see the breakdown of these things on these lower time frames, right? So the more and more you do it, the better and better you get. But again, practice. Practice makes perfect, and you'll start to see those results, guys. All right. All right, guys. Any questions? That's it for me. But is there any questions on the lesson? I hope you guys did understand. If anything, you can always replay this. This will still be on YouTube for you guys. But yeah, man, I hope you guys take advantage of this. This is golden stuff right here. Like I know it definitely unlocked a lot of things for me in my trading. And if you apply it to your trading, I think it will do the same, guys. All right. So I do appreciate all of y'all for tuning in. I appreciate that. And we'll tune in again next week for our next development session. Stay tuned, guys. I'll see you then. Take care, guys.